Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord community? Thanks, Dan. And how we doing in YouTube? All right, great, everybody. Welcome to the Traders Lab. I'm your host, Tom B. First of all, we've got some important announcements coming up right after I get through the disclaimer. I need you to pay attention. Also, next week, this primary stream will be done in real time, specifically in the Discord server. It will not be real time in YouTube, but it will be posted later in the day if you want to review it. So I encourage all of you that are visiting or interested in the TraderLab and building out a trade plan and learning structured trades that you can vet with the idea of building out a trading business, that you use the link in the bottom of YouTube if you haven't done so. Also, there's a special event that's open to everyone, and I'll mention that to you in just a moment. Now, this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. And it is based on structured trades. The idea of TraderLab is it's a community of like-minded traders who've come together to leverage their collective experience. Doesn't matter what you do, how you do it, or how long you've been trading. What does matter is, in spite of winning trades, which we all have, if you're still not moving the ball forward, but you continually are trying to fix it and improve it, which of course makes sense, but you're not changing your outcome other than the same random winners, then it may not be your intent, it may be your process. And this is, I think, one of the great misconceptions that developing traders have, that this is a business of confirmation and predictability and certainty, and we're always striving to avoid risk. Well, the problem, of course, with that is we can't do that. So maybe we have to solve for what the market actually is. And if you're not really sure what the market is, you may be trying to solve for the wrong thing, and maybe you can learn something a little different about market mechanics and potentially change your outcome if you do the work and, of course, vet it and create an edge and develop the discipline to actually execute it. And that's what the TraderLab is all about. Community of like-minded traders to support each other, bring ideas, vet ideas, so we can all get better. And again, welcome to the Traders Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get into real time, as they say, we'll talk. Now, a couple things. Hold on. And grab a pen and paper. I'll give you a couple statistics. Now, number one, do you have a favorite pet that supports you in your trading? Now, even if your pet is not supportive, if you have a pet and you'd like to feature it, now you might wonder why we suggesting this. It's very simple. We had a contest for free Bookmap a number of months ago, and some traders sent in their pet sitting in the chair. One had their dog with the paw on the mouse, which I thought was pretty good, and it gave an idea. How many other traders have pet companions in their trading room, and it may provide emotional support, or you just might want to have the cat be the fat finger. I've heard so many stories about cats walking over keyboards, throwing a 20 lot on. Have you ever had that? Send us a photo of your trading buddy with Bookmap in the background or your workstation. If you don't have Bookmap, you can get a free digital version of bookmap.com if you want to kind of play around with it a little bit. Just post it using the hashtag BookmapPets to LinkedIn, X, or Instagram, and you're automatically submitted for a drawing for a free Bookmap a month of Global Plus free. I like that. You like free? I do. Now, we have a special event today, and it's going to be happening right after this stream. It's at 1 p.m. Eastern Standard Time, and it's happening when I finish, or 12 noon Central Standard Time. It is an order flow event with Tradier. And now, if you want to see this, you do need to go to bookmap.com or use the link in the bottom of YouTube again, or the link that will be provided in YouTube or the Bookmap TraderLab. And that's a Zoom event. And you don't have to be a Bookmap subscriber or anything like that in order to participate. So, get on over there. You want to watch this. It's Zoom event, so there's going to be a link for it. You can get that either in YouTube, and Dan, please post it in there. Oh, good. Very good. Look at that. Or come to bookmap.com or the TraderLab. If you're interested in TraderLab, you know where to find us. Now, I think, let's not. Whoa. I'm not able to post some charts from that I usually do because of some technical challenges this morning. But I'm going to show you still market mechanics, how the market works, why it does what it does, and how you can at times get in alignment with it. Now, first of all, let's look at the RTH open. This is yesterday's high, which was the all-time high. The ETH all-time high was here. And if you remember yesterday, we started out on the long side, and then we did the Acapulco cliff dive, and it was short. And the actual low of the day was the ETH low, which had a high probability, about a 98% probability to take out the ETH high low. Well, initially, we were going for the ETH high, which was up here. Yeah, actually right there. And we got here yesterday, the RTH. That's what we call the near miss. And, that's the way it goes. And then when the market sold off and reversed and broke some structure, it was just shorts. Then the target coming down was, I think it was in the 20, I don't remember. Let me just look. I'll show you where it was. Yeah, it was right here. So this was yesterday's low, and 25 was our target. And those of you who follow the stream, review yesterday's stream because all these levels are laid out. What we don't know, of course, is how, if, when. How do you like that? We don't know. So this is not a business of knowing. This is the business of alignment. What I always say, at least for me, and I want you to talk about me, is that I know I don't know. So I don't come into this with a fixed idea. I come into this with a plan that I can define the condition of the market, and this is what other traders do, not just me. And when the condition changes, do you know when the condition changes? Can you define change? Now, everybody, this is related to time frame as you define it. So some traders may be just long, in a higher time frame, and they sit through the rotations. Subject to the time frame you operate in, you might be trading long, short, taking advantage of intraday rotations, and it's all different. So there's not a right or wrong. And a lot of traders say, well, what's the right way to trade? What I'm going to say is, what gives you a statistical edge in a process that aligns with you psychologically that you can execute? I can tell you for me, I don't trade a higher time frame anymore. I used to be a position trader, but as a day trader now, I'm in a shorter time frame. So I'm trading rotations, and based on volatility and range, that give me a lot of opportunity, and of course risk. So you have to find what aligns. So I'm not a higher time frame trader. What I am, though, is I overlay everything in multiple time frames, and think of them like Matryoshka dolls, vertical integration of time frames. So we all think of time, but when we get to the intraday, time is not the element. It's really participant behavior. Everything is built on how the participants behave. So, but what happens after that? Then we'll see. Now let's go take a look at what we know. Starting out, yesterday's retail price, and this is auction market theory. Now, the auction is simple. It's not a complicated thing. The auction is just shopping. So let's forget about the terminology. Let's think about what it is. It's when you go to the store, you're a shopper. Where high volume takes place in the product you're buying, and here it happens to be an S&P, but it could be a can of tuna. The high volume is retail. Buyers and sellers agree to do business, and that's where most of the business takes place. So we consider that a fair price, just like when you buy your tuna. Now, if the price of tuna gets too high, it's going to cut off the buying. Now, somebody will buy it up here if they need it for the casserole, but it shuts off the buying. Well, if we run out of buyers and somebody wants to sell tuna, what do they have to do? They have to attract more buyers, so they start lowering the price. Well, if the buyers see the price coming down, they may not want to buy it, and they may stop buying it. And if they stop buying it, these sellers who, by the way, we need a buyer on the other side, don't forget. But if the sellers are eating up the buyers, then the market's going to keep going down until the price gets too low, and then those buyers start consuming the sellers, the passive side. So that's why we get rotations. But subject to your time frame, this thing's going to roll around, buyers and sellers. And on outside edges of swings in any time frame, there's stops. I always think of stops as fuel. In other words, whoever's in a leg, the other side, if they get caught, they take the opposite side. So if you're short, there's buy stops, right? If the market starts reversing into the short sellers, they become buyers. You see what I'm saying? So every leg has the opposite side in it. It's just a matter of, do they get lit up? And if they get lit up, it feeds on itself. That creates our rotations. Then if you're in a trending or directional market, you'll still get rotations, but the counter trend rotations will be shallow, and then the extensions with the directional move will have more range. I hope that makes sense. Now, let's come back to the auction. This is the highest retail price from yesterday's RTH, fair price. In the ETH, and this is what sets up today, the ETH low tested this price. Now, there's no precision in the auction. I always say horseshoes and hand grenades. Remember, ETH low, there's velocity in the market. There's no rigidity. There's no wall. There's nothing like that. They're areas. I always think of it like real estate. Location, location, location. This is a location. So the ETH low tests here. This is our fair price. And if it's too low, what might happen? We can go up. You go, really? Yeah. So before the RTH open, here's what I know. Now I'm going to go a little further. So now you know about the ETH low. Anchor. Stake in the ground. Now what? We have something called a value area. I'm taking you to the next piece of the auction. Value area is where 70% of the volume took place yesterday. Well, the value area, lost it. Value area high is right here. 70% of the volume took place below here. That's considered a fair area. This is the fair price, but the market spent most of its time down here, so they were willing to do business here. Everything above was rejected. Yesterday's high, see you later, we're out of here. And then yesterday's ETH all-time high. So we know we have that. So I know from the ETH, maybe I found too low. Now let's keep going. The ETH mid is here, okay, and the overnight volume point of control is here. Overnight volume point of control is the new retail price. Yesterday's retail price here, too low. Current or most recent auction prior to RTH, high volume there. New fair price. RTH open. What is the higher time frame? North by northwest. Yesterday's RTH high. Here, what do you think? As Dirty Harry says, do you feel lucky? Do you want to sell it or do you want to buy it? Now that's up to you and your edge. Me, I'd like to get long. Just me. Let me show you how that works. Now, what do we know? We are opening higher inside of range, outside of value. It's an auction process. What does it mean? We're opening out of value, but we're in range. What does it mean? The market's slightly out of balance. What do we anticipate? Potentially an overlapping day or a normal variation day, which is just basically two-sided trade and up, maybe. However, if we break out of yesterday's range, what does that mean? We're breaking out of a balance area where we trade in the direction of the breakout and the potential range is unlimited. Now, that doesn't mean, we're going to Mars. It just means there's no way to know where it'll go. Okay? What is that? Why? The market's rejecting the former interpretation of value. We are breaking out. So, now, statistics. Grab your pen and paper. You got to vet everything for yourself. I do this because this is what a trade plan might be. Not necessarily for you, but how do you organize yourself so you know what you might do? Now, we don't know what the market will do. Remember, the market's 100% random 100% at a time, so no clue. So, but if we have a methodology, it might give us an edge to be prepared if our specific structured trade vetted with an edge shows up. And I'm going to show you those trades, some of them. So we're opening higher in range. Let's look at the probabilities. There is a 98% probability we take out the first hour's high or low. A 97% probability we take out the ETH high or low. I don't know about you. I'm leaning on the ETH high. What do you think? Which is up here someplace. We'll find it. The overnight volume point of control has an 82% probability there. And the ETH high on its own is 76% probability. The previous value area high, a 72% probability. So I'm opening outside in a higher time frame bull market. ETH low tested this, too low. This is my new retail price. I'm opening here, yesterday's high, right in front of my face. Where do you think? Right? Now, do you have questions? Post them. I'll do my best. I am having some technical challenges today. I just want you to know I'm going to do what I can. And if you're visiting in YouTube, don't forget we have a special event taking place. Let me see if I can get things working again here. A little challenged. Okay, back. All right. All right, sorry guys. Trying to deal with some technical challenges today. Just as a side note, I did a Windows 11 update, and I might as well just toss a grenade here. And it's took me a lot of time to get things worked out, almost 4 hours. Fortunately, I start around 5:30 in the morning Central Time, trade prep, and I trade ETH. So, but still, nothing like starting your trading day with a nightmare. So try to avoid that. Also, another little announcement. I'm going to be rolling over. So starting Monday, rollover, I'm going to be working the December contract. So no more ESU, it'll be ESZ. So I'm going to have to make adjustments. So all the levels get adjusted to the spread. If you don't understand that, you can go to CME and they talk about the rollover and when to do it. But I use Investor RT, so the rollover is going to be effective for Monday. The rollover's at end of day tomorrow, Friday. So this is the RTH open. Now remember, I'm looking to get long. So here's what I know. Well, we know about the ETH low. I know this is the last retail price. If the ETH tested yesterday's fair price or high volume and it's too low, then I want to get long. Now, of course, the joy of joy is where? Oh, wouldn't we all like to know that? Well, 1 second. And the ETH high is at yesterday's high. That's why it's covered up. So ETH high is here, and it has a high probability. So what I know, and now next piece, when you have a market that's opening higher, if somebody is sitting long or is short from yesterday, pick one. There's the possibility, a couple of things. One, if you're short and the market opens and goes down and you find buyers, you're going to cover. The other piece is if you are long, you may take some profits. It's not unusual, and that's called responsive selling. So in the open scenario, and this is a specific part of a trade plan, most developing traders should not trade anything until it's vetted and they know how to trade it and the edge. The open does not have structure, so it's a higher risk environment. More volume runs through on the open. There's a lot of banks and hedge funds and the rest of these guys. They got to get their business done, and they just have to do what they have to do. And so there's a lot of volume, and it can be a lot of volatility. So market makers may have to adjust, and all kinds of stuff goes on. It is a high risk environment to operate it. Now, if you vet and you have an edge, go to it, as they say. If you don't, observe it, learn it, vet it, because there's always more opportunities, because in TraderLab there are many structured trades you can reverse engineer. So let's look at the open. This yellow line represents the developing volume point of control. This is the overnight volume point of control. It's static. That auction is finished. This is developing time frame. So RTH open, who knows? ETH high probability. Yesterday's high, by the way, I didn't give you this, taking out the previous high or low, 82% probability. I don't know about you. I'm going here. What do you think? So I have to find a way to get long. Joy. So how do I get long? Well, I know I have a high probability to go here, and I also know I have a high probability to get to the ETH high and yesterday's high. What do I do? Great question. Let's see. Here's what I've figured out after many years of self-abuse. Patience. Don't worry about it. Manage FOMO. Don't worry about it. So here's a couple possibilities. This has a high probability. So the possibility is now there's a few ways you can trade this. If you take a long in here, this is aggressive. You'd be going for the ETH high, okay? And yesterday's high probability. So that's one option. Very aggressive, not my thing. Could be my thing, but it's not. My preference is this, because when I get long here, if I did, and I didn't get these early trades, I got later trades because of my problems with the technology over here today. This is my preference. If I take this, I know, what do I know here? This is what's so important. I know that the longs, remember I said how the market rotates on itself? If there's longs in here, and that would be me or not, this is the opening swing low. I'm going to mark it. Opening swing low, what's under the opening swing low? You ask. Well, stops. Where are the stops? Why? The stops are there because the longs who are aggressive are going to put their stops there. Oh, it's going to the moon. I don't want to miss it. Okay. And this is the first target. So but I know the stops are here. So these buyers if we rotate, they are trailing retail trader behavior. And by the way, this is a target and that's a target. Okay. And notice the liquidity here. Forgot to mention that. Trying to go fast. Got a lot to talk about. VPOC migration. This possibly suggests higher. Now, the thing with this is all suggesting higher. You got VWAP, you got your mid. This is VPOC migration. This is part of a structured trade. If you're taking this, you got to be looking at that, and it's very aggressive. Opening swing low. Now, so first target is achieved. Now, when this comes under here, this now is your support. If we break under here, these guys are on their way. Let's see. trouble, right? And where do we go? This is our area to get long. Right there. And why might we wait for that? Stop pick. I call it a stop pick. So these guys got thrown under the bus. Okay? If you took this trade, the VPOC migration, which is a structured trade, with the primary initial target hit, that is a FOMO trade in my world. I can't take it because of the target. Now, if this had happened in the ETH high, I'm not, and yesterday's high, just at the same place, were further out, I'd be all right. But my primary target is hit. And many traders will respond to taking profits at the previous day's high. Have you ever done that? Or a swing high? You know what I'm saying? We all do that. So this is structured, but it doesn't qualify for me. I want to point out, it isn't mechanical. There's more to it. Now, and it doesn't mean this just wouldn't keep going. That's the unknown, okay? So, when this breaks, when this comes under here, and especially under here, there's trouble. So, if you had taken a long, you took a long here, you take a stop. And that, for me, is not a qualified trade, just telling you. That's why I always say, don't trade this unless you understand it. It's location. This is the location, the stop pick, the value area high. This is your location for a long. If this is too low. So we know that. What we don't know, of course, is, what's going to happen. We got our full session VWAP. What do you think of that? That's interesting, huh? So let's look at a trigger. So here, I'm looking for longs. And again, I didn't get this. I was having trouble. So typically, these are trades I take. It's my thing. Whatever happens, happens. So let's look. I'm coming down. This is my location. So I'm looking for a trigger. So now I'm going to start looking at order flow, locations here. And I also can keep going. I got my stops out. Thanks for playing. They get a coupon to the buffet. And look at the buying. Now I have to get long. VPOC migration. Now, what have I done? What did I do in the ETH? Didn't I do the same behavior in the ETH? I came down, the ETH low is at that naked volume point of control, right? Now, what did I do here? Did I do the same thing in a different time frame? Came down to the retail price. Now, again, no precision, right? And this becomes my long. Now, I got to get long. How do I get long? Great question. Here's how you get long in this thing. This now is support. This is your VWAP. This is your VPOC migration. I come back up here. I bang my head on this. This now, I anticipate when I see this buying, this is initiative buying. So that's a great, look at the change, wham. Okay. So I got to find a long. Let's see if we can find one. This is right here. This is a long. This is a long. This is the VPOC migration. And I still had this open. So I can take it here. And why? Because I tested this. I tested that. I got the stops. And this was my resistance. I got to mark it, by the way. I call this VPOC migration. But if you're not familiar with it, it's not your trade. And it's the last place developing traders should trade. You'll take a lot of stops in it. I take a few more stops in this thing than I do otherwise because I'm really working with less structure, and it's like open field running. So it's very easy to get fooled. But the opening swing low, opening swings are very important because the market typically, or often, I should say often, comes back. Now, this is an order flow trigger. I'm going to show you this. Now, this is advanced, okay? So we have the potential for along here, along there. This might be a target. It's the previous ETH all-time high, or it's not. Your call. Me, no clue. Watch this. Order flow trigger. Let me see if this part of my setup is working. It is. That's nice for a change. I'm only going to say a Windows update blew out all kinds of applications. I had to do a restore. They didn't come back. This is a sweep. So this is the sweep detector. It's a great tool. It's very important for me. This is stops and icebergs. It's all available in Global Plus. It's called the MBO package. I wouldn't trade without it, but that's just me, because it gives me further insight. I want to know what's happening here. I want to know. Now, here, let's look at what's going on right here. Market's moving up. This is resting liquidity, passive sellers, icebergs, okay? I get a sweep here. Now, this sweep typically suggests the potential for a counter rotation buy sweep. I break through the liquidity. That means that this is like Pac-Man. Use simple concepts, shopping and Pac-Man. If the sellers consume the buyers, then we can rotate down. If the buyers consume the sellers, we can break through them. So we have a bunch of rabid buyers going on here. So now I rotate up, I get a buy sweep. Now the buy sweep suggests a counter rotation. These guys pull. So that's like taking the lid off the pot. I get this buy sweep, suggests a counter rotation. And this now is my support. It is an order flow trigger. And again, just, one of those things. And what am I coming back to? Previous all-time high in the ETH and an outside edge. Let me show you this. I'm combining concepts for you. This, when we start moving away from these consolidations, this is like a micro auction. Too high, too low, retail. I'm not paying that. Move away. What was too high becomes too low. Support resistance. Too high, too low. Where the volume is. Retail, retail, retail. I break away from it. What does it leave? It leaves an outside edge. It leaves a micro high volume, which is like an auction. So it means that's our retail price. And it leaves an outside edge. So we can do this, 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 or this, in this area. So if it pulls back, I know the appetite of these rabid buyers at the time, they consumed Pac-Man over here. So my support is there. Sweep, long, stop. So that's a TraderLab structure. You can learn that. I'm not saying it's any good, but you could. Now, what do we get here? VPOC migration. What is the language of the market? North by northwest. Potential add or nothing, or trade management opportunity. All up to you. Let's watch the behavior. Test of the VPOC. In this configuration, these are either adds or trade management opportunities if you're going for the long ball. All up to you. VPOC migration. What does it say? Let's talk language. This is really a language. So, indicators translate language. They're translators. Well, this is the same thing, but there's no indicator. This is just measuring volume. Remember what high volume represents. It's a fair price. But since we're in a developing time frame, in real time, what happens if the price changes? Now, in your store, they don't change it. But let's assume your store was in real time. Not like where they put it on sale for a week and then they change it. It's all the same here. It's just happening right here, in these rotations. This is too low. So, the market going to keep going. I can't see your questions at the moment. I will be coming up for oxygen soon. So if you're in TraderLab and you have a vetted plan, all you'd be doing today, well, not all you'd be doing, unless you're a counter trend trader, you'd be taking longs, adding, scaling, or managing. That's all you need to do. And these days are part of the, we all take stops, so we got to get over that. Other than, emotionally, how you feel about it. We all do. But if you've been doing this long enough, you just go, for me, it's always a curiosity. It's like, why didn't that work? Did I do what I was supposed to do? Yeah. Did I miss anything? No. Yes, no. If it's a yes, it's an error. If it's a no, it's, okay. That's good. Oh, you took a stop? Still good. Why? Edge. Casinos pay the gamblers. I mean, we're not immune, right? So, too low, too low, too low. Outside edge is out here. This is called a low volume node. Let's look at what it really says, language. This is an outside edge, too low. And then as we're in microstructure, we're doing the same thing. This is too low. These are too low. All these consolidations are auctions. So we talk about auction market theory. It's like, well, that's too high. Where's too low? Well, it's over there. See the red delta? Absorption. By the way, 85 sell stops come out. Who's got their stop over here? Not me. You? Let's go. Where's our support? There. And there. Right? If this price is too low, now the new retail price. You want to buy an S&P? This is the new retail price. But where was it too low? Most recently, right there. What is that? Absorption, resistance, support, break high, hasta la vista, see you later. Now, remember the statistic. First hour's high is called the initial balance. So far, longs only. And what was that statistic, you ask? I'm asking. There's a 68%-ish probability we're going to take out the first hour's high. And taking out the first hour's high or low, 98%. I'm going to take a chance here, step out on a limb and say it's going to take this out. Statistically, if I know it has that probability, wouldn't I be holding for that? And wouldn't I be adding or managing my longs for that? Question. How about yes? Maybe. So now what? Well, we're in uncharted territory, right? Where are we going? I don't know. So where's our next trade, structured trade in the TraderLab? It's the IB. We have a structured trade called the IB continuation trade. What it does, the way it works is, and you have to vet everything, remember, there's no plug and play. I know you're disappointed, so am I. Yeah, RP, congratulations on taking that. Leah MF Group, I'm having some trouble technically today, so I can't show you some of these elements, but I will. They have been shown in many of my other streams. This is the first hour's high. This has that 98% probability-ish to take out the first hour high or low, uptrend, locomotive. No shorts for me, just me. Someone who takes shorts, if they have an edge, more power to them. For me, until it's broke, it ain't. And I have an upside target, and this is not a recommendation. I have a resting order sitting up around 6,600. We'll get to that later. We'll talk about it. Not that it matters. Doesn't matter. So this next trade is if we rotate. Now, so far, there's been very little counter rotation. And look at the buying. I would say there's a lot of drool on the table because it's rampant buying. Now, here's a sweep. Now, remember how the sweeps tend to behave. It can be nothing, of course, or we can get a counter rotation. Now, before we go any further, we got to look at where the resting liquidity is, which I don't see. I know I don't see it. I like to keep this very dark. I'll come back to that later on the liquidity. Let me just see if I can show you here. We're going to have to come back to it later. So the IB continuation trade is here. So for me, unless I use other triggers like the one I showed you, which was that liquidity, then there's nothing for me to do here. So it's just longs. Now here's a sweep, and it's a potential for a counter rotation. Let's see what it does. See? So right here, I see liquidity come in. I got selling icebergs, and I'm getting my counter rotation. Micro high volume structure. I'm going to show you how I use these. And again, it's just a way. It's not the way. It's a way to think about this. I'm going to put a little line at these high volume nodes. Now, these nodes are basically auctions. So a consolidation, and it looks, just to outline it for you, a consolidation is really just where are the sellers and where are the buyers, right? So the buyers are here because you see the sellers, the delta, the stops coming out, but there's buyers absorbing. There's the iceberg. Those are the buyers. Now, on the other side, the sellers. And now look at this delta here. I got buyers. Why doesn't it go up? Icebergs. And I break. As soon as I break below this, this is a sell trigger. Now, a sell trigger can be used any way you want, subject to time frame. All this tells me, if I'm in an uptrend, is I'm going to get a counter rotation, or maybe it's the high of the day. Okay? Because I can't pick the high of the day, and it only is clear in hindsight for me. Now, I know there's traders who spend their lives trying to pick the high or the low of a day. And maybe they'll get that from time to time. Hope they do. For most of us, it's only in hindsight. So I never know when I see a counter rotation if it's the end or if it's just, but I have a structured trade here and I'm at new all-time highs. So I'm not selling anything. I'm hanging out. Let's see. And I have my next trade here. Right there. This is called the IB continuation trade. It's a structured trade. Now, let me show you. Now this one, much better for me. Now, let's look. We come down and we have our buyers. Now, one of the things I discuss in TraderLab is something called stop picks. And the way, what is a stop pick? First of all, location, right, guys? Where's the location for the long? It's here. What else do we know? This is an outside edge. You notice how, we were, and then we left it and we accelerated. There's not much trade here. We broke out of the first hour. That's an event. So, and that's why, we went up. Here's our counter rotation. This sets up looking for a continuation long, which is what this is. This is the area. Again, there's no precision. It's the area. And this is the trade called the IB continuation trade. So what I know is that if I get long here, which I can, I have to have my stop away from here. Because what can happen is the market can come down, pick the retail traders who have their stops right here. And I call it an inventory grab. What it is think about it this way. This is the sellers, the aggressors. You see the red delta. It's the sell stops coming out. Thanks for playing. Now, this sets up along here or here, and your stop cannot be there. Why? If we rotate down, take these guys out, here's the thinking. The buyers that were here that absorb these guys might still be here and go, oh, really? A gift? Let me throw another one in the cart. Boy, I got 2 cans of tuna now. So they absorb again. So if you are running a micro, a risk adverse stop, think about this is so important. When you make decisions, are you doing it out of fear of loss, or are you doing it out of good practice that's based on a statistical edge? I know, and it's not a recommendation, you have to find your truth for you, that if I put my stop there, I have lowered the potential of this trade staying so I can get my yield. How many times have you said, that they went for my stop? We all used to say it or still say it. You know what it really is? Nobody needs to go for your stop. You're putting your stop with everybody else. What do you think might happen if all this selling is sitting right here and the market gets buyers in here? How does it work in all fractals or time frames? The opening swing low, remember, we were anticipating it. What is under here? Isn't this a swing low there? And aren't the stops for these buyers over here? Do you want to join them? Me, no. In fact, if I wasn't long, I'd be using this to get long. It's even better for me because now these guys are out and I see the buyers. And now one other piece that makes it, this is kind of like what they say, the icing on the cake, a sweep. This is a sell sweep. This sets up potential reversal. So I got this. This is a nicer entry, but that's only after the fact. This is a legitimate long. So if you got stopped out, if you're in TraderLab and use this structured trade, you need to refine it a bit. You got to look at it. You have to think about where you put your stops, and you don't want to put them at what seems like an obvious spot. So this is the long, stop outside. This is the sweep in the long. Now, for me, I can move my stop once I get scaled. Then it's do your thing. VPOC migration going north. So that's a continuation trade in TraderLab. Now, where's my okay. Remember I was saying there are targets. 95 is a target. I was posting about this is where order flow comes in. And so 95 was a target, and they pulled. So when they pulled, I looked at this and I said, well, we have 95, but where's the liquidity still sitting? It's up here. So, and the market tends to like even numbers. Who knows, right? Now, let's look a little further. Here's a sweep. What does that suggest to this astute group of traders? Counter rotation. And where is my support? Let's just see if we can find it. If I can find it. I don't know if I can find it. Where is it? Just trying to keep my brain aligned here. So, too low, new migration, pullback, absorption. Got to clear this, okay? This is where my sellers were. Oh, there we are. And for me, this is not a recommendation. I have a target up a little bit higher. And we're caught up. Now, let me look at your questions. Trek is asking me, do I use liquidity triggers? I use them where they fit for me. There's nothing like I only use it such and such. I always observe behavior. Like here is an example. Here's liquidity. It's support. I break below it. Now it's resistance. I can look at it, and if I find a long, which is what this would be if it's in your plan, I would look at it. But since I'm in a bull, I'm in a bull run here, I have no reason not to be long, and that's not a recommendation. I'm just hanging in here. I have no reason not to be holding the trade. And the initial long into TraderLab was, for those of you who are visiting and you missed the top of the stream, was right under the opening swing low. Take out the opening swing. So the first long was around 53, 54, or it could have been here. Any of this is a long. The continuation long was there. And there's a couple other little things, and we had a liquidity trigger, also long. So I think, now the thing is, I know a lot of you guys want action. This is a business. This is not a video game. So I'm going to say is you don't need a lot of trades to build a business for yourself. But you can do whatever, suits you. I like to trade less, make more. I don't know if that makes sense to you, but and what I'm really saying is every time I put a trade on, I take risk. And every time I put a trade on, my risk is pretty constant. And, it's around 2.5, 3 points. It can be 4, just depends on the volatility and, my entry and a couple other. But that's within my trade plan. I can risk more. Doesn't matter. If I perceive the opportunity. So it's risk reward. I trade personally for larger rotations. It's the only way I pay for my stops because I take them, and everybody does. And it's just overhead and cost of production. So I'm not into this rapid fire trading, and I've done it. I used to be a high volume NQ trader around 2000 when we had the .com bust. That was pretty amazing. I was taking 100 trades a day. I've been there and done that. And you do that in the NQ, then you have to go to therapy after doing that. So, but I did that for quite a while, and that was fine because we had the volatility, and there were no micros back then either. And I also was trading the big S&P. So, I've got a lot of background in trading, and I've also done everything you guys have done. I mean, we all start out the same way. I mean, there's nobody immune. And even when I started, there were only books. There was no internet, no PCs. And the point of that is that in spite of it all, you still wanted somebody to help you. So I did what you guys do. I bought the books. And since we didn't have an internet and, influencers and all the gurus out there, I went to a seminar. And back then you'd pay a few $1,000s in money that still bought something. Back in, I remember I went to a Bill Williams seminar, and then I also went to a seminar, the first seminar that Peter Stottlemyre gave when the market profile was licensed and it was available through CBOT. So that was called Market Logic School. I also shared an office with George Lane. He created an early oscillator, stochastics. So I thought that was the holy grail. Wow, look at that, the line crossed over. This was all kind of new. It was new. All this stuff from Wells Wilder, all the stuff you're familiar with that's in your toolbox, and everything that came after that. So as indicators and hybrids of indicators developed, I was there. And I would pull them apart, try to figure them out. Everything worked, and then it didn't work. So I put them together, created my own, all kinds of stuff. And, played with the VIX, advancing declining volume oscillators on that, advancing shares, all that kind of stuff, issues. So much I don't remember, except I always kept coming back to the same place. VPOC migration. Let me look at my trade here. 1 second. I got to take care of business. Hope you don't mind. I have a target up above that's around 6,600. And it's not a recommendation. We have VPOC migration. This suggests what? Acceptance. Now, at any time, this thing can find too high and we can come back here. Just say it. So there's no automatic in this. It's only maybe. Maybe it'll do this. Maybe it'll do that. And my plan tells me what I do based on what this does. I don't make it up here. The important thing, since we're all subject to emotional stimulus, fight and flight, the lunatic, I call them hide. That's that prime wiring that takes over. Where, why did I do that? I didn't mean to do that. You know how you promise yourself, I promise I won't bail out. And then you do it. Why? Because of the chemicals that are released in your brain. As far as your brain is concerned, or your primal wiring, you've got to get the goods and bring it back to the cave so you don't starve in the winter. Also, you're fearful because what's behind the rock? Is that a saber-toothed tiger? That's why, as a species, we're still here. But we're also fearful of the unknown. And when you're here, this is the unknown. It's called the hard right edge. Everything is clear in hindsight. There is no hindsight right here. So how do you deal with unknowns when you're stimulated and chemicals are released in your brain that scrambles your brain? That's called the trade plan. What you are going to do is decided before you trade. In other words, you bring the plan to the market and then you adjust based on what your plan tells you to do. That's it. There's none of this, what should I do? And then it's fear. Right here, what does this suggest? Well, potentially continuation. Okay? I'm going for this. I don't know. And I have a stop in here. And I will give some open trade equity back if this thing falls apart. It could do that anytime. A tweet, a sneeze, who knows? Somebody trips over the cord at the CME. By the way, that's happened to me, where the CME goes down. I'm going to tell you that's pretty exciting. You can lose your breakfast and a lot more over that. Hope you guys are getting something from this. Let me take a look at your questions now. Direct liquidity triggers whenever. Everything has to be in alignment. The lime green line, Leah, is full session VWAP. This. But it's actually there. This may not be exactly in alignment, but it's pretty close. Mid, VWAP, and you'll notice, where are we? The highest volume for the day is here, new retail price. I have a sweep here, sell sweep. We want to see what happens here. And you'll notice I got these guys, this liquidity. They're selling. So the fact that they sell, they've been selling all the way up, doesn't mean that we're going to go down. But it can. We never know where the high of the day is. I mean, this is part of the thrill, of randomness. So if we don't know where the high of the day is, then here's what I know. I know this is too low. I know if this is too high, I will rotate down. I do know that my outside edge now is out here. This is called the low volume node. If I come out here and I don't fall apart, I have the opportunity to do something called a mean reversion trade. Mean reversion is the primary trade I suggest traders in TraderLab reverse engineer, vet, and create an edge with. If you're in TraderLab, you're not chasing this thing around because that's gambling. And gambling is fine if you go to casino, it's entertainment. This is business, so we're not interested in gambling here. You can, but that doesn't, if you want to be a career trader, you have to separate gambling and leave the gambling to the gambling establishments. This is a business, and the business of trading is gaming. And gaming is, you want to sit on the casino side of the table. It's not more complicated than that. And the way the casinos operate is a proven business model. So if we understand there's a model that already works, we don't have to reinvent the wheel. We have to adjust what we do to a model that is proven. And the business model of gaming is only playing games with an edge. So like blackjack, just as an example, they just deal the cards, they cut the deck, they do the same thing exactly the same way, and they play their game. And they pay the gamblers. So we pay, we pay when we take stops. That's fine. Overhead and cost of production. I don't see the casinos are getting depressed over that when they pay somebody. They don't change the next hand. They just play the next hand, because the only way they extract dollars from the gamblers is to extract their edge. So they bring their plan to the table and they just play their game. In our business, we have different games, different trades. We have the IB continuation trade. That's a game. We have the mean reversion game. That's an outside reversion back to the mean. That's a separate trade. So when you're in TraderLab, you would have that. And then it either works or it doesn't qualify, or whatever your requirements are. The business of trading is coming to the market with the plan. And now you manage your emotions because you're not questioning what you should do, you know what you will do. You never know what the market will do. That's the business. I hope that makes sense. If you're interested in the TraderLab, there's no cost for it. There's a link in the bottom of YouTube. You can visit TraderLab. Now, here's the thing. There are some requirements. It's not romper room. It's a professional community. And that's really, it doesn't matter how long you've been trading. It doesn't matter what you do. If you're not getting the results and you don't have a sustainable process, you might want to come to TraderLab. See if you can't work on that. There's no guarantee anybody can sustain themselves in the business, of course, because this is unlike anything you've ever done. Most of us bring our outside world experience, here. And we don't understand that we're seeking confirmation and certainty in an environment where it doesn't exist. I know for myself, when I built trading systems, I thought I could squeeze risk out by optimization or curve fitting. And yeah, I did, except it didn't walk, you do walk forward testing, but today's market is not last week's, is it? Or yesterday. So you're looking at broad averages. Well, and don't forget, back then I was a position trader. So when I talk about systems, they didn't really apply to this, but it was the same problem. It's just different time frame. So when you're curve fitting, tuning, tweaking multiple indicators, multiple time frames, and going for the nice fit, and you're adjusting this and a little of that, you're doing the same thing I did, except I did it, on steroids. It didn't work, though I always had winning trades. Anyway, we're going to see what this thing does. So this is an area to observe. Now, is this the high of the day? I can't answer the question, so I don't know. I will know if I come outside here and get under this level, then this will be too high at the moment. So this is important. What does it say? Let's talk the language. Remember, this is a foreign language. If you want to learn market and how the market works, you need to speak market. So you use indicators to translate. I get it. Me too. Except I found that if I can understand this, I'm in real time. I'm not waiting for something that might be conflicted. And also, just to go back to the casino concept in gaming, the casinos do not have variable multiple inputs when they play blackjack or any other game. They play them exactly the same way. When we throw multiple indicators together with randomness, so my RSI wasn't quite there, but my oscillate, my MACD did blah blah. My Keltner channel is sloping up, and it kind of came out the outside of the envelope, but it's running along the outside edge. All this stuff. My Fibonacci extension, works sometimes, and sometimes they don't, but I like them because they do work sometimes. And my Elliott wave is pretty cool. What wave am I in? Well, in hindsight, I'll know the waves, but I spent a lot of time on Elliott wave. I spent a lot of time on Fibonacci. I went into Fibonacci harmonics, time cycles. I could go on and on and on because I'm a researcher. And it was very stimulating, very enjoyable, but not profitable. So, what can I say? Is that you? Well, if it is you, now, unless, of course, you've figured it out and you can bring some of these solutions, bring them to TraderLab. We're all looking to get better. There's not one way to do this, but I found that as I was adding more and more and more, I was creating less and less. So I had to go the other way. And it was one of the hardest things I did, was to start removing things that I had on there for years. So now let's see what goes on. I got to turn some levels on here in Investor RT. 1 second. What you're going to see now are high volume and low volume nodes. And these are exported to Bookmap in real time and Investor RT. Let me try to get all these chats back. 1 moment. I blew a lot of applications out with this update. So you're going to see now high volume nodes, which are what these are. And all it's doing is highlighting these. Then you're going to see these outside edges, low volume nodes. Now, what a low volume node is and why it's material is the market ran. So the market has a tendency to come back and check them. They're also outside edges. Let's look at why. Let's think about this a little bit. The market accelerated. When the market accelerates like it did here, it's not auction. So we know there's stops under here, but the market would have to come below this high volume. It could come out here and get the stops out here. So this is a swing. Buyers were there. We tested it. Absorption was here. The buyers are here. So under this rotation, I know there's stops. So now I know that I have to be conscious of this and a possible test out in here or only out here. So we're going to watch this. And this is not a trade recommendation. By the way, there's 60 PDFs of structured trades that I've shared in the TraderLab that you can reverse engineer. Now, I'm not a vendor. There's no cost for this. I'm just sharing 46 years of this and some of the things I've figured out over that time. There's a lot more advanced processes that can be extracted. But what I have found is simple. You know, everybody says that trading must be very complicated. And I always say, no, it's not complicated at all. Let's change the word complex to random. If we're trying to solve for something, we need to solve for randomness. Did you know that this was going to counter rotate? Isn't this random? Now we have information here that says it might, but that doesn't mean it will. We have this. This could just as well have done that because it's a sweep. That's going the other way. It's random, right? If I have sweeps in this says it's going to counter rotate here based on the sweep. It didn't do it. Here I get the sell sweep and it goes up. Here I get the buy sweep. So it's fitting here and it goes down. Here I get the buy sweep. I get a little counter rotation. Here I get the sell sweep. Why doesn't it go up? Because it goes down. What is that? Random. So if I have a location and I see behavior, then it's possible I'll get a reaction. But am I trading this? I am not. You can, by the way. Now, here's the other thing. We're in an uptrend. Is this a short? Well, if you're a counter trend trader at new all-time highs in a bull market, I'm going to say that's your business. And that's okay if you have an edge, right? But suppose I want to get long or add in a bull market at new all-time highs. Where would I look for it? And this is not a recommendation. I'd be out. I'd be looking in here. Could be there, could be out here, could be not at all, and it could be a stop, right? That's trading. That's it. It's not more complicated, but it is random. Hope it makes sense. Now, I got to remind you guys of something. Right at the end of this stream, there's going to be a special event that Bookmap is holding at 1 p.m. Eastern Standard Time, 12 noon Central Standard. Hope I got that right. Today. And it's going to be about order flow and Tradier. You're not going to want to miss this. You have to register. There's a link in Bookmap server. There's a link in the Discord, TraderLab, and there's a link in YouTube. It's a Zoom, so you got to sign up for it, and you might want to take advantage of that. Also, we are having a little contest thing going on. Take a screenshot of your best buddy with Bookmap in the background or just your workstation, or you can download a digital version, no cost, of Bookmap from bookmap.com. Take a shot, submit it, use the hashtag BookmapPets, drop it on X, LinkedIn, Instagram, and you can win a free month of Global Plus. Very cool. Don't forget that. And don't forget this. Back to the action. So let's watch. Support is there. Stops are there. This is absorption. This is the last retail price, too low. If I come outside, then it's just a matter of observing. This is not a trade recommendation. If I come under here and get under there, then I have this. These are outside edges. So the market can come outside. If I come under here, then I just go to park and get back in the Barca Lounger. Me. Not what you should do. Just me. Hope you're getting something out of this, guys. Is it making sense? Yeah, your pitchfork. I looked at pitchforks. Everything works. Lovely. Most of the stuff that's out there, I've fiddled with and reverse engineered. And one of the reasons I did that was when I started in 1980, these things were just Wells Wilder, all this kind of stuff, DMI, ADX, all this kind of stuff, RSI was all pretty new. I think I've mentioned it here before, and I think I mentioned it earlier in the stream, so apologies. I shared an office with George Lane. He created stochastics. So, when you think, is there a holy grail? First time you see an oscillator, you might say, wow, there's a holy grail, until you dig into it and you find out that they're as random as anything else. So, but I thought I could mix pieces together and come up with something better, But what I didn't understand is the more I added, the more randomness and garbage I added, the more slop. And I actually was creating a problem. Actually, trying to solve the problem was the problem. The actual problem was the fundamental belief that I could put multiple tools together that are somewhat redundant in many ways. Whether it's an RSI, some kind of oscillator, they're really, very similar. Think what a stochastic is. It's really moving averages. So you need to understand what's under the hood. And even though everything works randomly, when you put them together, you're creating randomness. So just my experience. I'm not saying it's yours. So instead, I went the other way, and I found that I couldn't measure See, the problem is you can't measure random inputs. Casinos use anchored inputs, so that's what I talk about in my primer webinar, which is available in TraderLab. So TraderLab is a community of like-minded traders, as you guys know, but it's a professional community. It's really all about the business. It looks like this. Thanks, Matt, for posting that. He's showing a trigger for a reversal. And there's a lot in here. You could see a lot of comments, mutual support, and psychology. Everybody loses their mind, right? We all go on tilt. I do. Every once in a while, it's like, what happened? A little loss of focus, bang. And it's an error. Years ago, I came up with something called the error cost calculator. And I became really curious, I don't want to make these errors, yet I find I journal them and I'd still make errors. We all do. It's part of being human, but I never quantified them. In fact, we have something that Greeny created, one of our participants in the TraderLab, the error cost calculator. In about 2000, I think it was, maybe, or somewhere in there, I created the error cost calculator, and I started logging my errors and quantifying them. Trading, being distracted. By the way, the primer webinar, about 33,000 views. You might want to see that. So the error cost calculator, I found out that I probably had thrown, let me just say, over a month, maybe $20,000 out the window, that kind of thing. So you do that for a while, and you will be motivated. So I wrote a check out, and I put it on my monitor for the amount that I'd thrown away. In other words, I had it in my hand. I gave it away. We all take losses. We all have days where we're going to hit our loss limit. If the market and our plan are not in alignment, that is not the issue. By the way, Ned, thanks for curating this for us. Watch the primer webinar if you haven't done it. Meet the TraderLab. This is an advanced methodology. Now, what it's advanced about it is you actually have to learn how the market works versus trying to get your indicators to do the heavy lifting. I know that's why we have these toolboxes. The question for this astute group of traders is, why are there 100 or 200 indicators in a trading toolbox? Have you ever wondered why? Why aren't there just 3 or 4 good ones? So why are they in there? And why do they all work randomly? Here's something for you. Think about. If you had a random buy sell button and you didn't know if you were going long or short, you'd still have winning trades. What does that tell you about randomness? And so is there a holy grail of trading? How close can you get? And then day trading in the sense of fantasy or reality. stop gambling, start winning. And then there's a documents section. All kinds of great stuff here. Statistics that you hear me give, all kinds of stuff. Just a little something on TraderLab. If you're interested in it, there is no cost. There's the link in the bottom of YouTube. Get yourself in there if you, and you got to do the work, by the way. No plug and play. Sorry. Don't we all wish? Me too. Never found it. Stop looking. All the gurus and you guys are flooded with information. I think it's one of the worst things that's happened to you, because you can spend your life jumping from chat to chat, and the holy grail, the only one thing you need. Go out on YouTube. What do you see? The only one thing you need. How I made $4 billion in 6 minutes. Come on. I'm not saying it doesn't happen, but can you do that? Well, maybe you need a method that you can groove with, where you can find your flow. And everybody finds their own thing. That's why there isn't a plug and play. It doesn't work. You can come to TraderLab, and I will share these structured trades with you, but you have to you got to roll up your sleeves and reverse engineer. You know, why does this work? Why doesn't it work? When does it work? What's the probability, the way you operate in your time frame, for this process to work? We all take stops. Now look at what we're doing here. We are now looking for behavior in here. Now, if it comes out under here, then it's hang out. Now, and again, I'm not recommending trades. I'm just saying we understand what might happen. This is the retail price. If I get involved in a trade, I have to scale ahead of here. So this will be my point for getting ahead of it now, the way to get risk neutral. And I don't call trades because I don't want you taking my stop. What good is that? I take them. You take them. So take your own. Don't take mine. And if it doesn't qualify for me with a trigger, then I'm just going to stand back from it and just let it do whatever it does. So the price of discovery to get in alignment is a stop. You see? So that's it. So let's see what it does here. How we doing, guys? Please give a like if you're visiting in YouTube. Yeah, Michael. Yeah. We all did the same thing. We all tweaked our indicators, but we got the same thing. Again, I'm seeing in TraderLab a discussion about a short up here. If that's in your plan, you could fade this, and we know there's stops under here, and the market is long, so the market can come down. The question becomes, what do we do when we can exit on this, because it sets up a short, but it might only be a counter rotation. And the short we're seeing the short set up in here and this, because it can do this or that, right? Brilliant. So for me, I have nothing to do in my time frame. You see, I'm still monitoring my trades. That's all I'm saying. And if I get another trade in alignment with the trend, which can change, right? I might be doing, some additional work, or nothing, just hanging out, nothing to do, because my plan tells me where my next trade is. I'm not going, should I buy this? What do I doing here? This is what FOMO would be. Is this a long? Is it going to go there? Is it going to come here? My stops are under here. If I come out here, I can still be looking at a long. So it's not rigid. Trading is fluid. I know this is important. I know this is important. So right here, high volume node. This represents a retail price that was too low. This is the current retail price right here. If I spend time here and I don't regain this, then this will become the retail price. It'll switch down, and this will be too high. So at the moment, it's going to be potentially out here, back to there. If I fall out, then this trade will be negated, and then hang out. Let's see what it does. Please give a like if you're visiting in YouTube. Support the channel. Kind of a nice thing to do. There's no cost for TraderLab. There's an open invitation to you for TraderLab. You won't be solicited or abused. You do have to confirm your Discord username. Keeps the spam out. Keeps everybody calm. But there is a free event right now. If you go to bookmap.com Discord, you can access it. It's under the special events. It's in general announcements. You can go there, and you'll see it. It's an order flow event with Tradier, and that happens right at the end of the stream. So you want to go there. It's a Zoom link. You got to register for Zoom, so you can Zoom. And let's watch here. Now, this is not mechanical. It's an area. And remember where the stops are. So this is important to observe the behavior. Let's see what we get. So if we get under here, there's going to be stops. And the buyers that absorbed this delta, we want to see if those buyers come in. Now notice there was 523 buy-eyes. Now the fact they buy here is not anything for us. But we know there's buyers here, and you can see the icebergs on the other side up here. So they're always on both sides. But the question for us is, if this is too low and we're at our outside edge, right? What happens? Can we get back here? Now, I'm not calling trades, so I'm just giving you an area to observe. So let's keep an eye. Stop divergence. Triggering structure. It's not a recommendation. Everybody takes stops. Don't come after me with a pitchfork. Scale would be ahead of this. And hasta la vista, put your helmet on. Don't blame me. I'm only saying that in jest, but I don't call trades because I take stops. How can you avoid it? I can't. So this is a triggering structure. The micro high volume is right. Let me try to show you this. This here is like a micro volume point of control. This is the developing volume point of control for the entire day. It's a fair price. In this microstructure, the volume is there. So this is your little auction. Too high, too low, absorption, stop divergence, potential trigger. And again, everybody gets thrown under the bus, so don't get upset. And then you're trying to go there. That's the actual trade. And then it's the outside edge. So this is mean reversion. underlining the term mean. What we don't know, of course, is are we going to hold our structure or are we going to pick these guys off? So that's also possible. Let's watch the trade. Who knows, right? Is everybody with me? Can you kind of see? This is called mean reversion. I always say, yeah, it's mean. So and this is a primary trade that you would develop if you're in TraderLab, because the market is always reverting in all fractals or time frames. This is the reversion. So the reversion trade is, now I know I'm going to bore you with this, but when did I say this was our next trade? This is what having a trade plan is about. And it doesn't mean this trade's not going to take a stop. You know, that part, part of the joy. But if I have an edge and I can align with the structure based on the participant's perception of value, and I know in the auction this was too low, is it possible that we're going to come back and check what might have been too high? So what you need to be thinking about is, in other words, here's what happens with this thing. We're either going to go here, you're going to take a stop. That's as deep as this is. If we get here, then the next is out the top. And if we take a stop, that's the way it is. So let's see what we do. This is the TraderLab, guys. You can watch this on your own. I'm running out of time. Please give a like. Remember what the objective is. Scale ahead of here. And then out the top. And whatever happens, happens. 6,600 is a potential target. And again, it's not a recommendation. It's just one of those days. We have a special event going on. You need to register for it. You can do that. There's a link in YouTube if you're visiting. Go to general announcements. There's a link. You have to register for Zoom. Should be very interesting. It's happening in about 3 minutes. This is what that looks like. All right. And also, if you're in TraderLab, feel free. If you're visiting in YouTube, don't forget to like. Also, there's a link in the bottom of YouTube if you want to become part of the TraderLab. There's no cost. You won't be solicited, but it's a serious community. The reality of trading is it's a business. And a lot of us come into this, we don't know what it is. You know, is it a video game? We're chasing the market around. Would it be better, do you think, to have a plan, to anticipate a trade, to know where the trade might show up, to have a triggering structure, and to have the confidence, not in the outcome of this individual iteration of the trade, but if the trade has an edge, same as the casinos who only play games with an edge, that the probability of getting risk neutral before taking a stop is greater. If I can get here, and it's a couple ticks before, if I can do that and then shoot for a new high or test the high, would that help you in your journey? Please give a like. Thanks for visiting TraderLab today, guys, and I look forward to seeing you guys tomorrow. And remember, I won't be streaming live in YouTube next week, but if you come to the Discord community in the TraderLab, I will be streaming live there. YouTube will be posted later in the day, so you can review it. Thanks again, guys. Don't forget to like, and I look forward to seeing you guys tomorrow. And we are rolling over to the December contract effective for Monday.